Welcome to Megatrade101.com's video presentation of the foreign exchange market. This is in support to our market view analysis dated the end of July 9th. However, we presented an analysis and a view including the Australian dollar, which we basically have here in a four comparison charts on a 4-hour chart movement, on a daily as well as a weekly and a monthly. However, would like to indicate here that the turning point for the Australian dollar started on the 5th of July, right after the holiday trading of the 4th of July, and basically the movement had started from a slow down to an average moving average of 83.50, and the turning point on the 5th of July started here, basically when it started to move higher and touching a resistance from the trend, from a Fibonacci trend line, and basically working at that price level on the 84.71 level. And it looks like that it had touched a resistance line, and obviously the tendency of it is basically to move lower, which it did on a 4-hourly basis, and it has touched a 38% retracement level on the way up from a down movement. As you could see here on the daily chart on the Australian dollar, here is basically the price where it started to move higher at 0.8559 on the 6th of July, and has moved higher for the next 3 days, prompting us to take a position nearest the channel of 83.10, as you could see on our market view on the chart of the Australian dollar, that we took that position then. And on the weekly basis, that it basically had a bar, which is an engulfing bar, as you could see, that it has engulfed the previous down bar that looked like a down movement with a hammer, basically, or an umbrella, that showed some weakness from the resistance line of 88.30 here on a weekly basis. Looking at it on the support on a 23.6 retracement level, which it did here with a low of 83.14 on the Australian dollar, has finally made an indication of a double price, or some of them would call it a double bottom price level at the 83.14, and at the 83, let's see if we can get the price levels here, at 83.15 level, which shows a double price bottom that has indicated and still resting on a support level on the Fibonacci retracement around the 23.6 level, as I have mentioned. So the risk factor here is much lower than that when taking a long position on these prices, especially so if the moving average on the price is at 83.50 level, which substantially would be a very low risk factor. As shown on the monthly here, even though it had established a 0.8081 low price level for this particular month, Well, I would say that it had exhausted and still resting on a Fibonacci formation on the higher side. Okay, with that exhaustion, basically a correction upwards would have been the most logical way of looking at it. So chances are for the Australian dollar to move higher then was actually has a bigger chance, rather has a bigger potential of having a strong corrective move on the high side, which actually ended for the week at 0.8772. That prompted at least a substantial amount for gain if you have taken a long position on the average, moving average rather, price level of 0.8350 for the Australian dollar. This just shows how much effective the looking at the 4-hour chart, using it as an entry rather, a good entry and exit price levels, looking at on a touching here on the resistance price of 87.72, which is actually close to more than 400 points, as far as taking at least an 83 level and liquidating it at 87. So give and take a few points on your liquidation as well as on your entry levels would still be substantial. For every 100,000 leverage trade would give you for at least $3,500 on this particular trade. All right, we would like to thank you very much for listening and looking at this charts on the Australian dollar, and good luck to your trades. And we would like to present some more video presentations on the foreign exchange market as we go along with our market view presentations. Thank you and have a good day.